Greetings, everyone. Welcome to our COVID-19 leadership webinar today, April 1st, Wednesday, 2020. Not a lot to fool or joke around about today. We've got a great agenda for you. I want to thank you from all of our fellow CEOs at our fellow associations. So we have at present over 300 participants in the webinar. We had over 425 registered, and again, on behalf of my fellow CEOs with the American Alliance of Museums, AASLH, AAMD, the Association of Children's Museums, the Association of Science Museum Directors, Aztec, AZA, and the AAAMD, the AAAM, the Triple AM, the African American Museums of America. I welcome you. We have some great subject matter for you today. First, a few housekeeping items. Just if you can remember, we do not have the capability to do oral Q&A today, but there is a Q&A tab in the bottom of your Zoom screen if you're online. We can accept questions. You can also submit, if all you can do is call in, you can submit questions to info@publicgardens.org, and we'll route your questions to the Q&A. And our agenda, if we want to switch over for Richard to advance the next slide to the agenda, that would be great. Just to give you a few thoughts first, and then I'll introduce you to today's speakers in the order of go. So to give you a little bit of an idea, we conceived the idea of this webinar last Friday during the passage of the Coronavirus Stimulus Act, the CARES Act. And that was 5 days ago, and now we have over 425 people registered today. I'd also hasten to point out that in just 5 days in March, 60% of our member gardens closed due to COVID-19 considerations. So I think it's safe to say that as an industry, we've all been severely impacted on this, and we're all interested in survival right now. And today, what my hope is to offer you a glimmer of hope. Both Lee and Gabe are here to present some crucial business continuity information to you in regard to loans. Kate will come along a little bit later with a more step-by-step approach. But we are also here to hear your questions and submit your questions and look at our landscape. On behalf of my fellow museum sector association CEOs, there's really never been a time where I felt, and I know we feel like we haven't been more in sync with each other. So we are working together to be in sync to meet your acute needs. We had asked for $4 billion in funding to be part of the CARES Act stimulus package. We wound up seeing favorable loan terms and $50 million through IMLS, and then some funds through NEH and NEA as other things that are present in that act. But we will need you going forward to help us as we advocate for phase 4 funding. And so while the news that we might have to share today for grants is not fantastic, the landscape for loans is active, and it's something that is rapidly changing every day. So we're really happy to have some folks on. The only disclaimer that I would offer you is that in this landscape, I don't consider myself by any means an expert or the be-all expert. We're here to offer you assistance and offer you lines of thought and things you should be thinking about, things you should talk to your lender about, things you should be thinking about as you apply. But aside from that, on behalf of everybody, my talented team at the American Public Gardens Association, we are dedicated to you as members, and we want nothing more than to see you not only survive this, but be resilient and resume your role as a resilient leader of a strong community that you built. So I think without any further ado, I'm just going to shift over to Lee and to Gabe, who will guide you through the CARES Act presentation today. Thank you.
Thank you very much, Casey. Welcome. Get the presentation up and we'll start talking. So today we're going to introduce you first to LNE Group, our company, and then we'll talk about some of the programs that Congress has passed and the President has signed in connection with the coronavirus pandemic in the United States. So maybe first we'll talk about LNE Group, really not so much as a marketing piece, but more just to establish our bona fides. We've been around for 18 years. We are primarily a lobbying firm with offices in Ohio, Washington, D.C., and in Berlin, Germany. And a lot of our work over the years has been for nonprofit organizations. In fact, Holden Forest and Gardens is a client of ours here in Cleveland. Our spin on lobbying is a little different than a lot of others, we think. While we certainly do quite a bit of work on public policy, we like to focus on raising money for our clients. So as you can see in that slide, we've secured over $700 million in public funding, federal, state, or international funding for clients. But really is our goal to maximize the return for our clients in every engagement we take on. We have been involved in very complex grant writing opportunities. So we secured $40 million to put wind turbines in Lake Erie, working on other big projects too. But today we'll talk about what's going on in Washington, D.C. around coronavirus, particularly the economic injury disaster loan and the Paycheck Protection Program, and then others that are in the 3 bills that have so far passed Congress. And then, of course, talk about the expected 4th and maybe 5th bills that will be working their way through the halls of Congress over the next couple weeks. We'll have time for questions, which we want to answer. So without any further ado, I think I'll pass it over to Gabe Bilo, who is our Director of Federal Advocacy Services. He will take us through EIDL. I'll come back on and talk about the PPP, and then we'll continue from there.
Thanks, Lee. If you'll give me, and participants, if you'll give me 1 moment to correct the visual. Casey, if you'll tell me if that is correct, we'll move forward.
So that's still the About LNE Group slide, I think.
Hey, Gabe, if you just click on display settings right there on the top of the, yep, you can switch your screens. That might help.
Thank you.
Yeah, spot presenter view.
So that's full screen for everyone now, I believe.
It is for me.
Great.
And for me.
Thank you. So if we look at the first coronavirus bill, that was signed into law on March 6th. And the biggest thing, or the largest development pertinent to this discussion today, was it modified the Small Business Administration's Economic Injury Disaster Loan Program, or EIDL, one of the 2 large topics, the loan programs that Lee and I will discuss today. And what it did was to declare that COVID-19 was an eligible EIDL expense, where it was not previously. Typically, this program is dedicated toward natural disasters, physical natural disasters like hurricanes or severe flooding. The other thing it did was to make 501c3 organizations eligible where they were not before. There were no additional funds provided here, just the change in program authorization to expand eligibility of the program. And the CARES Act, which was signed into law on Friday, was the 3rd bill. I will say the 2nd bill, which I'm sure you've heard about, that was focused mostly on emergency paid sick leave, family leave, and unemployment stabilization. But as we look to subsidy or loan programs for small businesses and 501c3s, we'll turn our attention to the CARES Act. So what that bill did was it directed the Treasury Department to establish what Congress termed the Paycheck Protection Program under the existing 7A loan program at SBA, and spelled out some stipulations which we provided there. Interest rate not to exceed 4%. We've now seen that Treasury says that that will be much lower. a 10-year term maximum with some forgiveness for maintaining your payroll, and it waives some fees and others. Additionally, it changed the SBA loan, the SBA Express loan limit up to $1 million. It was previously $350,000. So this is a small business only, still no nonprofit eligibility, but that was one of the major changes in the CARES Act. The third thing it did was to effectively supercharge the Economic Injury Disaster Loan Program. It allowed a $10,000 advance payment, effectively a grant up front before the larger loan to stabilize small businesses and now nonprofits, and appropriated $10 billion to SBA to carry out the program. So what's available today is that the Paycheck Protection Program is being finalized at Treasury Department, and we expect a Friday rollout. They've already released some initial documentations for review. Lee can describe that in a little bit. Back to the SBA Express, those are available now with a quick turnaround of 36 hours, again up to $1 million. And again, those are for small businesses only at this point. And the SBA is rapidly going through the highly sought after economic injury disaster loans, rolling through towards that $10 billion figure. So if we look at the existing program on the books available today, we think these are the must-knows, and perhaps you've already heard some of them. We're happy to answer questions about both of the programs. So the EIDL is managed by SBA. You apply through their online portal, which sadly has gone down several times since the coronavirus has struck and Congress made the changes to the program to expand eligibility. They're only available in areas with declared coronavirus outbreak. So your region, whether it be a state or counties within a state, can be designated, leaving other counties without the eligibility. Again, that's found on the SBA's website, tied closely to White House disaster declaration signed by the president. You have to demonstrate substantial economic injury as a direct result of COVID-19. That needs to be included in your application package and narrative. It provides for loans up to $2 million. Again, you have to draw that linkage between the virus and the actual economic injury. You can use the loans once secured for working capital, inventory, equipment purchases, accounts payable, and other operating expenses. The interest rate for nonprofit organizations is 2.75%. For traditional small businesses, I believe the interest rate is 3.25%. And Congress required some automatic deferral of principal and interest for at least 6 months. If you're seeking a loan greater than $200,000, a personal guarantee is required. If you're seeking a loan greater than $25,000, there's no collateral required. We mentioned the $10,000 in emergency grants to applicants. You apply whether or not your loan is ultimately approved. The $10,000 flows automatically. The key provision here is that there's no double dipping. So when it comes to the Paycheck Protection Program, You can choose one or either for certain expenses that are eligible, but you cannot pursue both for the same expenses. And Lee can talk about how best to strategize on what to seek for which program. If you go to the SBA's website, starting yesterday, I believe, they required some disclosures. The text here is a little small, but this is a screen grab from the SBA's website where you have to select which type of applicant you are. Traditional businesses, not more than 500 employees. That's the traditional SBA cutoff for small businesses. The last selection actually states nothing about number of employees, just that the applicant is a private nonprofit organization. And it's a non-governmental entity. When it comes to the EIDL program, unfortunately, public nonprofit organizations are not eligible, only private or 501c3s and the others listed there. So when it comes to applying, you'll need to check that box or the appropriate box to move forward in the process. There's a second round of disclosures. You have to check the box for all of these. One, that you're not engaged in any illegal activity. It's not an agricultural enterprise. The second to last box to check, applicant is not in the business of lobbying. That does not mean that you contract with a lobbying firm like ours. However, it would mean that LNE Group, our firm, Lee's firm, would be ineligible based on SBA rules. And you'll see the last box.
Gabe,
Sure.
just add one thing for the audience. You can see how they categorize lobbying firms. They've got us among essentially strip clubs, adult bookstores, casinos, illegal interests, and members of Congress. So we're in very good company.
Interesting. There was discussion that the House proposal, the House Democratic proposal, would have banned lobbying for any of the large corporations or large enterprises that would take bailout money or subsidy money or loan money. That provision never became law. It never escaped the House Democrat proposal. There were no restrictions on lobbying or any entities that employ lobbyists or government affairs firms. However, SBA, in its wisdom, required this provision here. And again, the applicant cannot be a state, local, or municipal government entity, and you can't be a member of Congress. We'll move to the Paycheck Protection Program, which was the newest of the two programs, which has much interest. And I'll turn it over to Lee.
Thank you, Gabe, for that. So this was rolled out, as you probably know, last Friday as part of the CARES Act. There have been continual changes to the requirements. We believe there will be more changes before Friday when you can start submitting your applications to banks. So sort of keep your eye out for changes. I don't think there'll be any restrictions on nonprofits. You should be okay there. But there could be some tinkering with eligible costs and expenses and things like that. So just keep your eyes open. We're certainly doing that for our clients. So Paycheck Protection Program is a new program under the CARES Act. It falls under SBA Section 7A, as Gabe said earlier. It's kind of a charging up of that program. There'll be $350 billion available to give out to small businesses across the country. As you see on this slide, there's no need for a regional declaration of an emergency as there is under the EIDL. Loans will be up to 10 million, but there'll be very few of those that are issued. Much more likely to be 8 weeks of your payroll and expenses. That's the forgivable part. So the total loan will actually be 2.5 times your what's called payroll costs. And that basically would be the pay and wages of your employees, and then any employee benefits you cover, like health insurance, any vacation pay, FMLA pay, separation pay, and things of that nature. So it's basically all the expenses that get rolled up into your payroll. It does include some things, and you probably heard this already. So compensation to any individual over $100,000 a year is excluded, but just that portion over $100,000 is excluded. Doesn't mean that all of that employee's compensation is excluded, just the portion over 100,000. So that was an area of confusion early on that's been since clarified. It also excludes withholdings for federal income tax, as well as withholdings for FICA, which of course is Social Security and Medicare. So as of now, that has to be backed out of your payroll calculations. Now that might change, but as of now, you cannot include federal taxes withheld for your employees or payments you withhold from employees for FICA, Social Security and Medicare. It does include, you may include payments you withhold for state and local taxes. So SALT, as sometimes it's called. That's permissible. So you can include any payments withheld for state and local income taxes from your employees' paychecks as part of your quote unquote payroll costs. So the eligible uses for the Paycheck Protection Program are this payroll we talked about, rent, interest on mortgages, and utilities. So there are some variations in there. What is a utility? What is rent? We think rent probably just means rent on a building, not rent on a copier or some equipment, but that might yet be clarified by the Treasury Department. Utilities will probably include typical utilities. Again, that might be clarified by Treasury as we get closer to Friday when the window opens. But think of this really as a way to cover 2 months of your operating costs, of your basic operating costs in your business. Interest rate's going to be 0.5%, much lower than the 4% that they had forecasted back last Friday. That's the good news. Bad news is it's a 2-year term, not a 10-year term as it had been promised last Friday. I think that's probably okay for most borrowers because in the vast majority of the cases, the amount of money you borrow will be about the same as the amount that you get forgiven if you maintain your payroll, your head count, and your compensation to employees over the 8-week measuring period we'll talk about in a moment. So I don't think there'll be very many borrowers who take very much money out beyond the end of this year when they are deferring principal interest payments for at least 6 months and maybe longer. But it will be at max a 2-year term. Next slide. We have the next slide. Can we do next slide, Gabe?
I have the second PPP slide up.
I still see number 1, but okay. I've got second one on my computer. All right, so the good news about PPP is there is no personal guarantee or collateral required. So unlike other SBA loans that require, in some cases, a personal guarantee, they also require collateral of some kind that's waived in this case. They're also waiving another important requirement that typically requires, which is that you demonstrate you have no other source of financing for your project or for your loan. So they're waiving the what's called no other source requirement. So this really becomes a much more streamlined, much easier process for borrowers to engage in. And we think that's very important. Second thing is the affiliation standards. So that doesn't apply to, it does apply to nonprofits. So this basically means that if you are part of a larger organization that has more than 500 employees, you will likely be ineligible to apply for a PPP loan. And I don't know how many of you that affects, But remember that the definition of small business in this case is less than 500 employees. If you are part of a larger organization that has more than 500 employees, chances are you will not be able to apply and receive a PPP loan. We talked about earlier, so the loan amount will be 250% of your average monthly payroll costs. If you have been in business since January 1st, 2019, that's calculated on your average payroll cost, your average monthly payroll costs in the year 2019. In the unlikely event that participants today were formed after December 31st, 2019, they would look at the average of your payroll costs in the months of January and February 2020. But for the vast majority of those on this webinar today, I'm assuming, they're going to look at your average monthly payroll costs in 2019, multiply that by 2.5, that will get you the maximum loan available to your organization. So once you have your loan, there will be an 8-week period called the covered period, when you have to maintain certain headcount, FTE, as well as maintain compensation for certain of your employees. This is really the measuring period for how much of your loan will be forgivable ultimately. And so that it starts from the day you get your loan and it extends out 8 weeks. We'll talk about the headcount and the compensation tests here in a moment. If you're a seasonal business, they will use alternatively a 12-week measuring period starting February 15th or March 1st, whichever you choose. So, but if you're year-round, like I'm assuming most of the participants are, they're going to give you the 8-week period starting from when you get your loan from the bank. All right, next slide. So we already talked about this. The forgiveness piece, we'll talk about it now, I'm sorry. It is equal to 8 weeks of your payroll costs, as we defined earlier, plus interest on mortgages, your rental payments, and again, we think that's gonna be just rental for your office, leases, and utility service agreements. We are led to believe that because of how much money is going to be requested, that no more than 25% of your loan should be used for other than payroll, which is to say you should use at least 3/4 of the loan proceeds you get to cover your payroll. It's a very important point. You will need to, when you go for forgiveness, declare to the bank how you've used the money. And again, you'll want to show that at least 75% of the funds were used for payroll, with the remaining balance used for things like rent payments or utilities. We talked about earlier the exclusion on employees making more than $100,000 a year. That is simply the money above $100,000. It's not a firm exclusion on their entire compensation. You can use the funds for other purposes than what I just described, but they will not be forgivable. So for example, if you use the money to pay down debt, that money would not be forgiven after 8 weeks when you go back to the bank to ask for forgiveness. Point 4 here, I've already covered. The bank will work with you to verify that the expenses for which you use the funds are covered and allowable under the PPP. And now we'll talk about the reductions based on headcount and individual employee pay during the covered period. So the covered period, again, is the 8 weeks from when you got your loan, and then plus 8 weeks from there. If in that period you reduce headcount compared to 2 different timeframes that you get to pick, you could see a reduction, a proportionate reduction of your forgivable amount of your loan. So you can choose the period February 15th, 2019 through June 30, 2019 as your comparing period, or you can choose the period January 1st, 2020 to February 29th, 2020. So what you'll do is you will look at your average FTEs over the 8-week covered period. So let's say that's 50 FTEs. Then you'll go back and you'll look at one of those two periods I mentioned, either February 15th, 2019 to June 30th, 2019, or January 1st, 2020, February 29th, 2020. And look at the average FTEs in one of those two periods, again, at your choice. So the fraction that is formed by the FTEs during the covered period over the FTEs in one of those other two measuring periods becomes the number against which you will multiply to see if you are going to lose any forgiveness on your loan. You can't go higher than 1, but you could go lower. So for example, if you had 50 employees in the covered period, but you had 100 employees in the comparison periods, you could lose half of your forgivable loan. The second test is the individual employee compensation test. So if in the 8-week covered period, any employee who makes less than $100,000 a year sees at least a 25% decrease in his or her compensation compared to the last full quarter of your business's for your business, that will reduce as well the forgivable portion of your loan. So anybody under $100,000, you cannot decrease their pay by more than 25%, or you risk decreasing how much of the loan will be forgiven. Any employees over $100,000 doesn't matter. You can take them down to 0 if you want, because they don't count in this individual employee pay test. So again, 2 tests, headcount test, and then the individual employee test. If you pass both of those, then you should get 100% of the maximum forgivable amount of your loan. Next slide. So the EIDL has been out, as we know, for a couple of weeks already before the PPP comes out. If you applied for and received an EIDL, you can refinance part of it into a PPP loan if that's in your interest. The remaining portion that's not refinanced as part of a PPP loan would remain in an EIDL. So they would run kind of side by side. You'd have your PPP loan and your EIDL loan. If you take advantage of the EIDL and you get your $10,000 grant, that'll be subtracted from the amount forgiven under your PPP loan, which is, I think, important to understand. Now, you can have both an EIDL and a PPP. So as long as you're not using the funds to cover the same expense, you could do both. So for example, under EIDL, that money is used for working capital, which could include, among other things, paying down debt or paying accounts payable. So you could use EIDL funds to cover your suppliers or to pay down some debt you have. Then you could have a separate PPP loan to cover your operating expenses like payroll, utilities, and rent. So as long as you can, in good faith and good conscience, show that you're using the funds from those 2 loans for separate expenses, you can maintain a PPP loan and an EIDL loan. Next slide. You want to pick this one up?
Sure. So also in the CARES Act, Congress approved some emergency appropriations for the existing agencies pertinent to our discussion today. Casey alluded to them earlier before we started this presentation. The National Endowment for the Humanities and the Endowment for the Arts each received $75 million in addition to their fiscal 20 appropriation that was approved back in December. So on top of those existing funds, each of the endowments, humanities and arts, got a $75 million increase in emergency appropriations. They did come with some strings. 40% of that is set aside for state and regional organizations. And these bullets here refer to both endowments, humanities and the arts. So there's a 40% set aside for state and regional organizations. The balance, or the 60%, is set aside both for $45 million in direct grants towards at-risk positions in the humanities or the arts, museums, libraries, and other cultural folks. So the statement that both agencies put out is that there will, since the funding was approved on Friday, is that more details will be coming up, but Casey may have some additional insights there after some discussions that he has had. IMLS got $50 million in emergency appropriations, again, on top of IMLS's FY20 approved appropriation back from December. For IMLS, there were no set-asides, but Congress dictated that there should be a focus on digital inclusion and capacity building around technical delivery. They also directed that IMLS should issue grants to states. Now, again, that was what was in the appropriations bill, in the appropriations portion of the CARES Act. Typically, Congress provides direction. Agencies, especially with a smaller budget like this compared to the others that were recipients of large emergency appropriations, may have some discretion. I know Casey has some insights there, but officially IMLS is saying, at least through their public works, since the CARES Act was passed on Friday, as the details will be coming out soon, IMLS did point to their sister agencies like NEH and NEA, saying that, recognizing that both sister organizations would be supporting a similar footprint of constituents like yourselves. So we'll see how that becomes a reality in the coming days or weeks. There's also a change to the charitable contributions outlined there from 60% of an individual's average annual gross income to 100%, 10% limit, from 10% to 100% to 25% for corporations, which could be helpful if you have high value contributors to your organizations. Another change to the tax code, which has received a good amount of press, is the employee retention tax credit. Just like the PPP, intended to encourage and provide financial support for major employers of all sizes, not just small, medium, or large, but across the board, to maintain your payroll through this critical period. The catch is you can take advantage of the employee retention tax credit. That would, however, make you ineligible for a PPP loan. So you need to weigh the pros and cons of each program before you would decide to pursue, but that is another opportunity that the CARES Act provided.
So Gabe, I can step in if you want on the IMLS 50 million whenever you wish me to.
Sure, go ahead.
So we've been having, as Museum Sector Business Association CEOs, discussions with the Institute of Museum and Library Services, and in particular Crosby Kemper, who's the head of IMLS. They are even today finalizing their potential distributions. And in my conversation with him this morning, I think the thing to make clear is while they are definitely dedicated to getting this call for funding out as quickly as possible, they are kind of going through the following machinations as they go. The first is that they want to make clear that not all of that 50 million is going to museums. A certain chunk of that money is going to be set aside for libraries. So we would only see a certain amount of that funding. They are also looking at the National Endowment for the Humanities and the National Endowment for the Arts as sort of partner organizations in this. So there are some museum sector businesses that have a good track record of funding, say, for example, already with NEH, or are more eligible for funding under NEA. And so IMLS would like to reserve the funds that they have to go in partnership with those and not duplicate those. We are also, as museum sector business association CEOs, being asked to assist in developing the exact metrics for how we would quantify museums and living museums, history museums, zoos, as applicable and as active businesses for this. So the discussions here are ongoing, but in the next several days even, I think we'll have greater clarity on that. My greater point is this: when we look at NEH and NEA funding, and we look at IMLS funding, that's funding that's going to come, but it's going to take time to even have that call go out. So what is there and is there right now is PPP funding and EIDL funding. And the date at which lenders are going to be accepting PPP applications is April the 3rd. And of course, the EIDL funding is open now. Back to you, Gabe.
Thanks. You can go to the next slide, Casey. So phase 4 is something that's already being discussed. It was discussed over the weekend, and there have been several press conferences by elected officials like Nancy Pelosi, and who's done interviews with major news publications yesterday, and a press conference today speaking about infrastructure, which we listed on this slide, the second to last bullet. The White House is developing a list of priorities for additional funding based on agency requests. House Democrats are already positioning to support, through more robust payments, state and local governments. Budgets are strapped, as we know. More individual payments could also be in the future. Some elected leaders have called for treatment coverage for COVID-19 itself, some pension guarantees. There's always a securing pensions is always a trouble spot for Congress. Again, they may try to provide a fix here to provide some financial security, especially for upcoming retirees. Certainly recovery funds for hard-hit sectors. Casey alluded to that at the beginning. I think the House Democratic proposal for the CARES Act, which again did not become a reality, I think called for $500 million initially for IMLS, what became 50 at this point, if I recall correctly. President Trump has called for some tax relief, tax incentives and expenses for what was taken away in the 2017 tax reform for restaurants, which have been suffering. Also more fixes for restaurants and franchises is something else that's being talked about. So the first, second, and third coronavirus supplemental bills were fairly straightforward compared to what may become of phase 4. So it may be larger, but it will take time. Leaders are indicating by the end of April would be, which is now this month, the end of this month would be when a bill may come together with sufficient granularity to go through the legislative process. So right now they're accepting ideas from constituents like yourselves and from other members of Congress up the leadership chain in both chambers. The president is on board. I think it's generally understood that there will be more supplemental bills to address the coronavirus situation, even a 5th bill. So this next one, we see it as very much a cleanup bill that will ideally support sectors and industries that did not see the type of relief that they had hoped for in bills 1, 2, and especially 3. Think of the special carve-outs and the enhanced provisions for the airline industry, for example, or airports, due to the impact that the coronavirus has had on them. Attention was there, rightly or wrongly, and I think everyone on this call knows that your sector was not top of mind, or at least a top priority, given the situation being considered in Washington. So phase 4 will be a very robust discussion. And I know a lot of folks will be are already positioning to be a part of that discussion through their members of Congress, especially members of Congress who sit on influential committees or have seniority in both parties and in both chambers of Congress.
Well, just one thing to add to what Gabe has said, which was excellent, Gabe. Thank you. I know that the last time, Casey, you said you asked for, was it $4 billion? We think going back in this phase 4 with maybe a more targeted ask could be interesting. And maybe working through an existing organization that already gets funding, Washington, D.C., that's in your industry, which is probably easy to guess. Maybe trying to find additional money for the U.S. Botanic Garden that they could, through maybe new authority, give out grants to struggling botanic gardens around the country. So Gabe referenced going to the right people for that. The Botanic Garden falls under, on the appropriations bill, it falls under the bill that funds Congress. And the chair of that subcommittee in the House is Tim Ryan, Democrat from Ohio. So it might make sense to reach out to people like Congressman Ryan or others who have interest in botanic gardens, but try and tuck the funding into something that already exists. Don't create a new program that's separate from something that doesn't already exist. Go into something that's already there and see if you can't get more robust funding, more money, and then work with that organization on some kind of a grant-making program to help your member botanic gardens.
And on IMLS, NEA, and NEH with their placement in the Labor H Appropriations Bill, Subcommittee Chairwoman DeLauro, who's also positioning herself to be the full committee chairman in a year, will be critical. The only challenge that may come up is those are the same, that's the same committee staff, same members who are also funding HHS and all the agencies that are going towards the federal government's coronavirus response. Those that are not related to the military, for example. But there's certainly a lot of opportunity and more to be done.
And if you can get out from under NEH and NEA and IMLS and have your own separate pot that falls under U.S. Botanic Garden or some other source, it will be a lot easier for your members to get some kind of funding to get through these difficult times.